The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful February 5th. Actually, it should be TH, shouldn't it? February 5th, it is National Pancake Day. And if you go to the IHOP, they're going to raise maybe $3 million today for charities and in the communities in which it operates. Kind of interesting. I've got my friend's mom who lives by a group, but I guess it's now a, what would you call them? Not disciples, but missionaries. And they call themselves IHOP, the International House of Prayer. And they're fighting over the IHOP name because no one wants to actually say the whole thing out loud. But they're actually looking at buying my boyhood home, which is now a DMZ, a demilitarized zone. Lots of bullet holes I hear in my old house. And ended up being kind of a rough area of town. When I moved there, literally I could walk a couple hundred feet and be in the cornfields. But not anymore. It's all built out after, 40 years, I guess, when I moved into that home. And not a great area anymore. But we'll have to see. But anyway, the IHOP people, not the Pancake Bunch, but the other one, trying to buy that whole area out and clean it up and drain the swamp that it became. So maybe that'll be nice to happen. Maybe one day I can go in there without a shotgun and look at my old boyhood home yet again. But National Pancake Day, nice day to always have pancakes, isn't it? Anyway, what do we have going on out here in the IPOs? We talked about on Monday, Boise Cascade actually upped the amount of shares that they're going to be selling. So look for that one to be strong. Symbol is going to be BCC. Going to come out probably tomorrow or Thursday. Probably the big news out here is Dells-Hell, and they're going private. And of course, they were private once and went public. Now they're going back private. There's lots of reasons to go back and go private for a company that has issues. One of them is you don't have to allow everybody to see your books after you go private again. You can get a lot of things done without people sticking their big nose in to all of your business, especially if you have to drop margins, do other things that the street doesn't like. They're not out there trying to run you out of your own company if you're Michael Dell. And you can pull some things, clean up the books, and then push it back out. A lot of times you don't do anything and come back in a year or 2 years later and push the company back out for twice what you paid for it. A lot of times it's a fairly decent deal if done right for the investors. Normally the investors in the short term that have owned it are the ones normally getting screwed over. It happens enough that a lot of people know that they are probably not getting a really good deal for the price of the company, that Dell's willing to sell out for $13 a share. Probably figures that probably should be somewhere around 17 or 18 bucks. But we'll see how this works out in a year or two. But there are some reasons I've brought up before. In the 1980s, 1987, 1988, Apple really wanted to start licensing the building of PCs to other people like Dell, and the Wall Street just would not let them. If they would have gone out there, they would have had a year and a half or 2 years of everybody wanting their scalps because the margins had come down dramatically during the transition from them building all their hardware to them licensing their software, just like Microsoft did. And you know, there wasn't a lot of call back then to go back and go private. Probably the thing that Apple would have needed to do to actually go through this. Sometimes you just can't do the right thing as long as Wall Street's looking. Too short term, and of course they're going to punish your stock. And what can you do then? Everybody's looking to shove you out, even though you may have a long-term plan that is worth something. When we look at this deal, Microsoft's going to kick in about $2 billion. They'll probably make $2 billion more. I would love to see Microsoft do something much better with their $2 billion, just like Apple's $120 billion. Can't these guys find anything to do that would be well worth putting that money to work? I think they can. I think that they won't. And it just continues to be the same conundrum. But Michael Dell probably be happier in a private company till he gets this thing to go public again, and then he'll bail on that deal, get a new CEO, cash out his money in a couple of years, and probably retire, my guess is. But not a big deal, and certainly no money to be made. They have a 45-day buyout period, so if someone wants to come by and offer more, they certainly can. But there's no reason to. There's going to be a poison pill on that. They just did it to shut up some investors that know that probably a rotten deal for them and a great deal for Michael Dell, and probably a wonderful deal for the investors one day out here. The DOJ and the S&P, of course, yesterday started really leak. That the Department of Justice was going to sue Standard & Poor's. Standard & Poor's was getting warned before they downgraded the U.S. debt not to do it, or we would come after you. And the gangsters in the government basically went after them at the pretty much exclusion of everybody else. We're seeing the charges finally filed, but did they do wrong? Yeah. So did everybody. Why are they going to be punished? Pretty much because you do something that the Chicago bunch doesn't like, they are going to come after you. And we're seeing that in the S&P. The other ones are just as guilty. Don't expect to see anybody actually come after them as long as they toe the party line just say there's no problem with all the huge debt that we're amassing out here. But we'll find out how this works out. I suspect that by the end of this, it's going to wind up the DOJ probably with a lot less than they're talking about now, and probably a settlement one day that's a whole lot less. Other things going on the market, Virgin Media. We're going to start getting into some charts here real quick. Virgin Media, which is what, VMed, I think. I'll take a quick look at it. VMED. Some talk out, some takeover talk out here. Of course, Virgin Media, the conglomerate for all Virgin companies out there, just absolutely rocking out here. Was in the 39s yesterday, up around the mid-45s. And a lot of these stocks that are short just doesn't take a whole lot to run a nice little rumor out here and get it going. But so far, not a lot actually happening. You can give me a call at 877-927-6648. That's 877-927-6648. We can talk about what's going on here. We're going to take a quick look at the market out here. Last I looked, not a huge push with volumes so far, about 2.4 billion shares, which is about exactly what we had at this time on the way down. So not a whole lot of volume up, not a whole lot of volume down. I'm still looking at some stocks I have here that can't even turn 100,000 shares that were doing a million a week ago, 10 days ago. So they are up here with quite a lighter volume, and we can just see what they're doing. Some funny business this morning with some of the quote systems, and they're getting that cleared up, so don't be surprised if you see some bad ticks in the data today. We're seeing some other things. Apple actually starting to pop up just a bit. It's up about 3.5% or 15, almost $16 up here, and that's what do we have out here? 458.05, 14 million shares is not a rousing endorsement. Just a lot of shorts probably in this stock now, and like a watch pot, these things go down slowly. But I'm not either short or long. I think eventually Apple is going to work itself lower over the next probably 3 months, I would imagine. We had other things moving. Gold's off a little bit today. What do we have out here? Gold closed at 1673.70 an ounce in April. Gold down $2.60. Not a huge move. March silver rose 16 cents to $31.88 an ounce, but not a whole lot. Copper, March copper, unchanged at $3.77 an ounce. So not as much as you think going on out here. Kind of a quiet market, but as soon as it goes down, they have to go push it back up again. As Al Pacino said, as soon as I think I'm out, they pull me right back in. And just not seeing a lot of volume back in here at these highs. And if I probably wasn't short a lot of individual stocks, I'd probably be thinking this was a bad day to be short. But still doing okay with a few of them. Of course, we are around that $14,000 mark. Everybody had to put their party hats on once, then take them off. We are back at that level. 1406, yeah, 14,006, 14,004. Are we up here with any kind of real gusto? The answer is no. Is it enough to probably hold? Unknown at this time. The president did come out and speak, and I guess the question is whether or not the inflation of these assets is going to continue, and where you can actually put your money where it's safe. And I think a lot of people are jumping out of the frying pan and into the fire, trying to chase stocks up at this level, especially with the light volume that we're seeing. Let's see what else is going on out here. Wanted to look at a few other stocks. See if I can get those back. Let's see. Well, give me just a second here. Make sure everything's moving along. There we go. Wanted to get in and talk a little bit about Baidu. They had an earnings miss, not unexpected. You have to be very careful of these Chinese companies. This one looks like it's headed back fairly quickly to the $85.96 level. I have not liked any of these Chinese companies for a while, mostly because they still haven't solved the issue with being listed on the New York Stock Exchange or the NASDAQ, because they've not reported fully. None of these companies from China books are correct. And you could wake up any day and find out that argument has ratcheted up a level and see a big hit in these stocks. Baidu's today is just on earnings, but we'll be back in a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, like I said, you can give me a call, 877-927-6648. That's 877-927-6648. I'd love to take your call. It's a quiet day out here, even for the market to being up. Of course, everybody putting their Dow party hats back on, 14,005 today. Volume is light so far, 2.4 billion shares. For this to probably stick up to 1550, you're probably looking at 5.5 billion shares. We certainly do not have that. The long term looks, if you don't believe the change in volume, looks like it would be a long-term blow-off top here without some kind of volume coming in the next few days as we get up into these levels. But we were constantly having, the last time at these levels, 5-6 billion shares a day on the consolidated New York Stock Exchange tape. Doing 2.4 is nothing to write home about. Certainly not a lot of juice back up here. And we're seeing some stocks up on extremely light volume ahead of earnings and just ahead of some other things. And, of course, they are falling off. Even stocks that I find extremely interesting, stocks like SodaStream. Of course, a lot of advertising in the Super Bowl. They spent half of their marketing campaign for the year on that Super Bowl ad. Hasn't really seemed to do much the last couple of days. This company is about 50% short right now, according to CNBC. I haven't gotten the latest numbers, but I'm going to assume that that's correct. That it can pull back, being 50% short is rather amazing, but you're going to have to wait until they blow off some of the high-end shorts in this thing. But if there was going to be a company that did a Netflix and absolutely destroyed short interest holders, this would probably be the next company, so you want to keep an eye on it intraday. I wouldn't be holding it overnight. A fairly dangerous company. In stocks that we found in the scan, there's some that are fairly testing previous highs fairly lightly. General Cable Corporation is one, BGC. There's a high, long-term high volume down gap that happened on the 9th of February in 2012 on 2.7 million shares. Tried to get back into it on May 2nd with 1.3 million shares. We had a nice little reversal signal, and if you're looking for these little abandoned babies, certainly got that on the on February 1st with 260,000 shares. So very little light, very light coming back. Light again out here today. But if you're looking for how some of these are coming back and challenging high volume moves down from over almost a year ago, in fact a year ago, fairly interesting to watch these. Not a lot of energy back. Energy's not that horrible. So I wouldn't be shorting that, but a lot of these have hit their highs. Credit Suisse Group, which is CS, another one of these that had very long gaps that it came up and tested. These gaps go back on high volume down moves from November 28th in 2011. There's two gaps up here. The first time this thing tried to fill it on March 19th of 2012 on 2.5 million shares. Around that $30 level. $29.97, 2.5 million. Got a little higher this time on 1.7 million shares on February 1st, and we've pulled back into that trading range. A little higher out here today, but a lot of these stocks, especially if you're interested in my Power Law Vector Indicator, a very good setup here in that the high to low is almost exactly the same, and making a nice little example. So what did you have in this? Probably off about 20% out here for this last leg up compared to the leg down on heavy volume. Of course, you've never tested that August 2nd low that had 3.5 million shares, which is fairly decent. You'd like to see that tested before it goes up. This thing could be in a massive trading range back down to that $16.09 low from August 2nd, just midsummer last year. DVA, which is Davida. Now, when we look at this one, another one that's off, 30-40% on volume on its last test of its high. When we look at this, the company is the DaVita Health Care Partners. Kidney dialysis, that kind of stuff for patients, but breaking above its previous high, coming in and testing 1.2 million shares with 800,000 shares, and closing back below it is a sell signal. Give me a call, 877-927-6648, 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we're going to go through some of these stocks and earnings, some that came out this morning, some that are coming out after the bell tonight. I just wanted to look and see if there was anything else I was missing out here that I want to cover during this segment. Again, you can give me a call at 877-927-6648. Let's see. And just going to add a few to my list as we discuss this. See if there's anything else out here that I missed. Next, Magellan. I need to get my Jeopardy music going out here. Panera. That was a good one. Panera after the bell tonight. PNRA. And what else do we have? I think we've got enough to go through. I'll finish up some more here if I have some time. But we're going to go through some of them. Arch Coal, I think that's the first one. Let's go through this real quick. Arch Coal was out before the bell this morning. We talked about this one for a long time. The administration has decided that it doesn't want any more coal plants. It's going to slowly cut them out of being able to produce electricity with coal. There's absolutely nothing in this sector as long as the current administration has its EPA policies on how much carbon dioxide and sulfur you can expire. And you might think that's a good thing or a bad thing, but for the most part, these coal companies are out of business. They are going to be put out by the government. Left to their own devices, probably do fairly good. They are trying to find out ways of shipping our coal overseas. Coal is still probably one of the least expensive ways to create power. The only cheaper one is nuclear. And when you actually put back in some of the expenses from nuclear, maybe it's not actually the cheapest anymore. Down on heavy volume, this thing's going back to $5.16. High volume, untested low. Good reason not to be in these stocks other than about 5 minutes, because you're always waiting for the other shoe to drop and come back down to this $5.16 low from July 26th last year. Archer Daniels Midland out here, interesting. It popped up a little bit. Volume is okay. It is a little higher than the October 18th low out here, so it is going to confirm it. Depends on how this stock closes. Might be a good one to be watching out here. And along with MOO, which is the agriculture ETF. This thing's been hanging right around these highs for a while. Volume has been light. Not surprising that we're seeing a little bit of pullback in Archer Daniels Midland. Aflac, after the bell tonight, not doing much here. It's got a gap down around 44 bucks on a miss. Most likely, I suspect this thing's headed to $57.39. Probably slowly after the bell. Cerner, another one out after the bell tonight. CERN is the symbol on this one. It's got some nice gaps below. It has gapped up on lighter volume. Good indication that if you're playing this one after the bell and they miss, this thing's probably going to rocket down to about 78 bucks fairly quickly. It's going to have very good support at 75 bucks, where it took off with monstrous volume. But especially the last 2 weeks, not a lot of volume out here. Probably the one that most people are going to be looking at here is CMG. This thing, you can make a case making a huge ABC down. Of course, probably too many shorts in the stock for the average retail investor. It has moved up off of its lows of 233. Could you get the little short squeeze in this? Don't have a good feeling on where this stock is moving. If it does come in with lighter numbers again, down to probably 233 over time. And on good news, could see this thing go back up to 351, which is the high from September 17th. But again, another one with very high short interest. But most of the people short in CMG have very deep pockets and a very long time horizon. Computer Sciences out before the bell this morning, nice gap up. Did gap through a gap down on very heavy volume. It is short on volume today. 14 million shares on May 26th of 2011 on a huge gap down on that day. It is finally coming back into that range today. It gapped over and through it, but about 3 million shares. So this is where everything starts to get very dangerous. Also out today was Diamond Offshore Drillers, down on earnings. It's gotten a little better, spiked down to about a little less than about 71 bucks earlier this morning, but repaired a lot of its problems out here. When you look at this, it's had a slow trend upwards as it continues to buck on lighter volume. If you want to look at one that's probably getting ready to crack to the downside, Diamond Offshore looks like one of the weaker stocks out here in this energy sector. Keep an eye on it. Expedia, after the bell, they're pushing it hard tonight before the earnings, and up on lighter volume, but up at fairly close to highs. It needed 7.7 million shares from the July 29th, 2011 high to get through it. Really hasn't had that quite yet. Earnings probably going to be good enough, but what we're looking for tomorrow and as Expedia is 7.7 million shares to just break out and go higher. There are some huge gaps lower. To me, this thing looks like on earnings disaster would be back to about $55. And on a breakout, wait for it to come back and pull back to that $66 level over maybe the next few weeks. If earnings are good, it might be a valid long-term breakout. Kimco Realty Corporation, another one of these at the highs. If I'm not mistaken, this thing comes out after the bell tonight. KIM, probably get a decent reading. This is up at highs with volume higher than the previous high, but it looks like it's going to close below that high. So we're going to see high volume at this high and close below it, so a valid sell signal. And then, of course, earnings after the bell. September 14th high, $21.16, 3.1 million shares. We had 4.8 million shares as we got up into these highs. And actually, not too long ago, a 10 million share day on the 25th, which I think pretty much ran a lot of the shorts out of the stock. And what do we have now? Just the last few days where we had, 4.8 million shares on the 1st of February. Panera, another one, of course, looking at wanting to run up and retest the high one more time at 175.26. That is on October 4th. This thing also has a monster gap, and support is right around 150, 152 in this. If we see a big earnings miss on this, look for it to be right back in the 150 range. And options pretty much telling us there isn't a lot of good plays out here. Pre-announcements on most of these. The only thing to do is play them in after hours. If you can get a very fast finger on these and catch a real earnings miss, not just some goofy numbers out here. Don't really see any here today. I've been playing a few of them myself over the last few weeks, if you've been listening to the show, but going to continue to be somewhat problematic. Wanted to look at a few of these other stocks that we had. We'll look at some of these that are doing some Gartley patterns out here. If I can get it going, huh? Let's see. Got just a little shorter. There it is, Hornbeck Offshore Services. Again, a lot of these energy companies are looking extremely tired. The volume's not all that bad. It's just they've pretty much moved exactly as they should. Time for a retracement. Hornbeck Offshore Services, HOS is the symbol on it. Nice Gartley pattern out here. Energy, not all that bad, but could be a lot better on this last leg up. What we haven't seen is any kind of volume above the X point, which is the November 1st high at $38.06 that had 1.4 million shares. Even when you look at the December 5th high that had 450,000 shares, we're just kind of in that range right now. So keep an eye on Hornbeck out here. We've got also Mattel actually making some bigger moves out here today. This thing, I guess you could consider that this thing is breaking out as we look at this just a little bit farther. But we need 3.4 million shares. You kind of came with that in about 7.5 million shares on the first. It didn't close above that high. Now the last 2 days, 4.2 million shares. So you finally get that volume yesterday and you get a high. So if you are looking for a few companies that are actually breaking out with higher volume, Mattel is one. This thing needs to probably pull back right around that $38 level. And this might be an interesting buy if the market decides to go higher and I'm wrong being short. Right now, I've got most of my positions doing pretty much exactly as I would expect them to be, but up on very, very light volume. So we'll continue to keep an eye on this. Again, options not that expensive. Even today with the VIX up, what do we have? A VIX at 1353. Consider if you want to be long, consider buying protection from the downside. It is very cheap. Relatively for most of the market. No one is thinking about any downside. That's normally when the surprises come out. And what else do we have? Oh, I want to look at some of these other ones. Tests. What else did we have out here? Unisys Corporation, kind of interesting out here. This one is another one of these that's going up and testing previous highs out here. We'll get just a little longer time frame on this. A lot of these have had some long-term gaps. Those gaps are starting to get filled. In the case of Unisys, a pretty heavy down, couple of down days. Actually got into coming down on about 2 million shares on the 14th of December 2011. We are getting back into those moves. This thing could move a little higher out here, maybe up to 27.43. But even if we just look at the last major high, which is on September 19th, at 1.7 million shares, we are going above that with 600,000 today. Had about 1 million yesterday, and did you have 1.5? 1.5 on the 31st. So we are going to be short as we break some of these highs previously, and that is the most generous of the highs. If you even look back on the March 16th high, that had 2.1 million shares. So we are breaking through these on lighter volume on many of these stocks. What I dislike in some of these patterns, like Unisys, is you had a lot of volume from the June 5th, 2012 low up to the September 19th high at 22.87. You had very decent volume. It was very consistent on the way back. You pulled back a little bit farther than you would like to see, down to the November 15th low. Energy, good, but not blowout or anything. Of course, a bigger retracement than you would like to see. We're probably pretty much up to this ABC move and on light volume. We did have a nice little pop on the 30th with big volume, but still nowhere at the close to the high of that September 19th high. That we're seeing very light volume out here makes me think we would come right back into this $21 level that Unisys saw on the news day that it had. Going to look at a few other ones out here and see how they've done. Let's see. We've seen a few in this housing sector start to roll over, and they did have high volume. Some of the other ones that interest me is the Jefferies Group, JEF. This one's another one breaking highs on half the volume. JEF is the symbol for Jefferies Group, and what we're looking at is the March 20th high at $19.82. We saw that with 4.3 million shares. So what have we had the last few days as we've gone through there? And even today, moving up 1.6 million shares, 3 million shares, 3.4 million shares. So about 1 million shares short. And today, very light so far. Kohl's, one of these that got blown apart. It tried to get back in. I brought this one up a few days ago. It tried to get back up. Probably one of the weaker retailers out here. It might get back up into that $46 range again. Might be a good place to pull the trigger on this thing. In my opinion, this is setting up for a nice ABC down. And if we look at the expansions on it, it could be fairly significant. Only retraced 37% so far. Could it get a little higher? Yes. In fact, I'd like it to get maybe up to a 50% retracement. But one of the weakers out here. Right now it's projecting down to about $32 on a 1-1 ABC. Probably get up a little higher, maybe around set up a ABC down to $34.50. I think that's probably a little bit more likely. But keep an eye on KSS, probably setting up for some extended weakness, at least a retest of the low at 41.35. Give me a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And as we come back, we'll look at a few more stocks before the end of the day. Seeing a lot of stocks fail on volume today. We've got 2.6 billion shares and about an hour left in trading. This is going to be a light day, about 3.2 billion. We needed just to match what we've had in previous weeks, 4.5 billion shares. We're going to be probably a billion light out here, so very light volume. We're going to have to find something tomorrow to keep this market moving. And I don't see a whole lot looking at those earnings tonight that really are going to push this market. Of course, everybody believes that just like the housing market, it will never go down. The government won't let it. That is probably one of the times to be most nervous in this market. Looking at the advanced supply line over the last few days, finally starting to get some selling pressure into these stocks. But I've got stocks doing 1 million shares for multiple weeks out here, and turning 100,000 shares today. just awful hard to think that these things aren't going to blow up and soon at here. Very rare that they go the opposite way when volume turns to absolute dust at previous highs. I think probably looking at a lot of these IPOs might be very weak yet again. Facebook, of course, popping up today. In fact, let's go ahead and look at Google first, then we'll get into Facebook. We saw higher volume, which made a good indication that you're going to get at least one more retest on Google. It could not hold those highs on higher volume on, what was that, Friday of last week. But probably going to get one more retest in there. Volume is light today. You need to see this thing go over and hold $775 on more than 2.7 billion shares. It's going to be very light today. Kind of interesting on why we're seeing this bounce at here. But you're going to have to be very committed one way or the other to make money. Of course, bulls and bears both make money. Pigs get slaughtered. And I have a feeling that if no one is willing to sell up here, that is probably the weaker side of the market. We're going to look at Facebook. Facebook kind of interesting, and just a little bit of reversal of yesterday's move, actually inside move on that candle. Volume really didn't pick up too much yesterday. I suspect Facebook is headed down to the $27 level and probably going to fill this gap here fairly soon. I know that we had some callers last week that were talking about being in Facebook puts. It might be a good, interesting time to start thinking about taking it if we do get a good down day tomorrow and volume does not continue in Facebook. What else do we have out here? RPC, OCN, Owen Financial Corporation. This kind of interesting one that may be making a huge top and with the ability to move maybe down 25%. But certainly very light volume on OCN, which is Ocean Financial Corporation. So keep an eye on this one. Last high, October 24th, $39.83. Basically, 12 million shares. We're getting into it with a tenth of that. Probably going to close over it, I guess, today. But a close back under $39.83 on this would be a sell signal, and I think you're probably going to get into this gap around 30 on any decent pullback. Been moving very well out here. We only have about 30 seconds left today, so we'll look at the volume one more time in the S&P. But like I said, need about 4.5 million shares. We've got about 2.7 million shares. Looks like that's going to project out to about 3.3 million shares by the end of the day if we're lucky. Very interesting to see very light volume once again pushing at these highs. Be very careful out there if you are long. Anyway, you have a great and safe day. Catch me tomorrow at 2 o'clock. Same bat channel, same bat time.